Good day, everyone. You're welcome to this week's Business and Investment Tips program, a production of RCCG Christ Church Radio with Ayodeji Ebo, an investment professional. This week focuses on Nigeria's Q4 and full year 2023 GDP report. Last week, the National Bureau of Statistics (NBS) published Nigeria's fourth quarter and full year gross domestic product numbers for 2023. The Nigerian economy grew for the 13th consecutive quarter since it exited recession in 2020. Real GDP rose by 3.46% year-on-year in Q4 2023, that is, versus Q4 2022, higher than the growth of 2.54% year-on-year recorded in Q3 2023. In the full year, GDP was up 2.74% year-on-year, 0.36 percentage points lower than the growth of 3.1% recorded in 2022. The accelerated growth in the fourth quarter was mainly due to improved performance in the industry sector, boosted by high crude oil production. Also, the agriculture sector proved resilient, posting a 2.1% growth due to improved harvest season amid incidents of insecurity in major food-producing areas. GDP tracks how an economy performs and measures the value of all final goods and services produced in an economy in a given period, usually a quarter or a year. Real GDP reflects the actual value of goods and services produced without the influence of price movements. Simply put, the GDP of a sector can be affected by both the volume of goods and services produced and the respective prices. Nevertheless, what's important is the increase in goods and services produced rather than the price increases. Nigeria's GDP report captured 19 sectors, but only 5 sectors account for 71.7% of total activities in the economy. These are agriculture, 25.7%, ICT, 16.6%, trade, wholesale and retail, 15.3%, manufacturing, 8.1%, and real estate, 6%. The non-oil sector, which accounts for 95.3% of Nigeria's GDP in Q4 2023 and 94.6% of full year 2023, has been the major growth driver since the country exited its recession in Q4 2020. The non-oil sector grew by 3.1% year-on-year in Q4 2023, up from 2.8% year-on-year growth in Q3 2023. Ultimately, the non-oil sector grew by 3% in 2023, weaker than the 4.8% achieved in 2022. Agriculture sector growth rose to 2.1% from 1.3% in Q3 2023, while growth in the services sector stayed flat at 3.98% in Q4 2023 from 3.99% in Q3 2023. Meanwhile, industry's growth was impressive at 3.9% year-on-year, which was better than the growth of 0.46% in Q3 2023 and the highest since the 2020 recession. On the other hand, improved security efforts have started to pay off in the oil sector as oil production volumes increased to 1.55 million barrels per day from 1.45 million barrels per day in the fourth quarter. Consequently, the sector recorded a commendable growth rate of 12.1% or minus 0.85% in Q3 2023 after 14 consecutive quarters of contraction. Overall, the oil sector declined by minus 2.2% in 2023 versus minus 19.2% in 2022. Based on the contribution of sectors to GDP, the services sector picked up momentum, 56.6% in Q4 2023 versus 52.7% in Q3 2023, while the contribution of the agriculture sector, 26.1% in Q4 2023 versus 29.3% in Q3 2023, and industries declined 17.3% in Q4 2023 versus 18% in Q3 2023. Here are our takeaways. 1. Remarkably, 18 out of 19 sectors expanded in Q4 2023, save for transportation and storage sector, which contracted for the third consecutive quarter due to the removal of fuel subsidies and naira devaluation, which has affected business activity. 2. The rebound in the oil sector is commendable, 12.1% year-on-year, as the efforts of the new administration to curtail crude oil theft yielded positive results. Crude oil production rose by 15.7% year-on-year and 6.9% quarter-on-quarter to a 2-year high of 1.56 million barrels per day in Q4 2023 from 1.34 million barrels per day in Q4 2022 and 1.45 million barrels per day in Q3 2023. 3. Despite the depreciation of the naira, which increased building costs, the real estate sector contributed 6% to the GDP in Q4 2024 to rank 5th. This can be attributed to the increased activity in the space, especially in low to mid-level housing projects. 4. Growth in the ICT sector slowed, albeit positive 6.3% for the third consecutive quarter due to slowdown in growth in the telecommunications and information services subsector, which moderated to 6.9% year-on-year in Q4 2023 relative to 7.7% in Q3 2023. This can be linked to the regulations in the sector to ensure phone lines are linked to the National Identification Number (NIN). 5. Growth in the manufacturing sector came in weaker at 1.4% year-on-year due to constraining consumer wallets, which impacted demand as naira devaluation and high fuel costs continued to bite harder following the contraction of 1.9% in the previous quarter. 6. The trade sector growth softened 1.4% year-on-year in Q4 2023 compared to 4.5% year-on-year in Q4 2022 due to the devaluation of the naira at the official window, which increased the cost of clearing imported items, leading to slower demand. The sector was also impacted by high energy prices. 7. The financial sector's growth came in stronger at 26.5% in 2023, the best annual performance in 21 years on the back of FX adjustments, which boosted earnings in form of FX revaluation gains as well as expansion of loan books in naira terms. In 2024, we expect Nigeria's GDP to sustain its growth path, though GDP is projected to stay at sub 3%. We expect the traction in the oil sector to be sustained as the government intensifies efforts to increase oil production. The approval to auction dormant oil fields abandoned by international oil companies (IOCs) for over a decade may further boost oil production and translate into a higher contribution to GDP. The commencement of operations of the Port Harcourt and Dangote refineries should also bolster activities in the oil sector. On the other hand, the rise in inflation rate, naira devaluation, and expected higher energy prices, petrol and electricity, may constrain the non-oil sector. Also, the higher interest rate, which will lead to higher finance costs for the manufacturing sector, may impact the profitability of the companies. Thank you for listening. Please join us same time next week for another exciting, interesting, and insightful session. For questions, comments, and feedback, kindly forward to ebo.ayodeji@gmail.com or send an SMS to 07062463747. Stay blessed.